Good morning and welcome to the annual general meeting of the Cooperative Family Credit Union. This is the first time we have held a virtual meeting. It's a development driven by the current circumstances, but perhaps one that we will be introducing alongside our usual meeting in Manchester in the future, as this has given us the opportunity for more of our members to join the meeting and take part in the running of our credit union. I hope the technology is going to work well for you. We have a number of votes. I've tried that out in rehearsal. I believe it's really easy to use on screen. We will be able to show the results of those votes in the meeting. We do have some additional votes to add into those numbers due to limitation on the technology. Some votes have had to be cast in advance. If you have any questions, you can use the question mark icon at the top of your screen or the side of your screen and key in your question or comment, and we will be reviewing those through the meeting and we'll try and answer as many as possible during the meeting, but we will get back to you afterwards if we do not. If you've got any issues with how technology is working for you, there's a little icon which looks like a sheet of paper on your screen. If you press on that one, you'll find a to guide, and that should be able to answer the technology that we've got a full agenda, including our treasurer and auditors taking us through the results for the last financial year, report from our CEO Matt Bland, the annual presentation of the Southall Award, and a presentation from Mid-Counties Cooperative Society, whom we are relaunching our long partnership. We have no apology. Our directors are going to get a little bit late on joining, and the supervisory committee are there today as well. We'll start with the minutes of the last AGM. I know it was a long time ago, but if there are any comments, can you please indicate to us using the question mark icon? Otherwise, we will go to the first vote of the meeting to approve those. Can we move to take the vote on the minutes, please?
Just a few more to vote there. If you still wanting to vote, please do so now, or I'll be closing the poll in about 10 seconds. Okay, I'm closing the poll now. And share the results.
Yep. Okay. Thank you all for that. Were there any questions raised there at all, Matt, or any on the question marks?
Mr. Rudd said he couldn't vote on the system, but if you could just type it in the question function.
So John's one of our directors, so John will be taking your vote as a vote in favour already. So your votes are counted along with all the rest of the vote.
Makes sense. Okay. Right. Thank you for that. I hope you found that straightforward. That a few more votes to come. And move on to my report for the year. Okay. The last year has been a very challenging one for all of us, to say the very least. A year ago, we reported on a solid year's performance and had much to be optimistic about. Little did we know that the COVID-19 pandemic would engulf us all and present us some of the stiffest challenges the credit union has faced in its 22-year history. It is therefore with some pleasure and no little relief that we can present to our members a fantastic set of results for the financial year. The Treasurer's report, which is coming along in a moment, provides the full details on our results, but with a surplus of 15,000 and having grown our loan book by 20%, we have exceeded our expectations despite everything we've had to contend with. Matt and his team have worked incredibly hard to deliver these results and to provide improved service to our members. They set up home working for the team at the start of lockdown last year, launched a new messaging app to improve online service, brought in a new email and office platform, and have served a rapidly growing membership. But the financial results only tell part of the story. We have embarked on a comprehensive review of our governance and strategy to provide us with a solid foundation for future growth. In September, we agreed a new strategic business plan and set of growth targets, with an aspiration to double our loan book by the end of 2023. And Matt will be providing more details on this in his report. Having spent several years as a much more hands-on board, actively supporting the staff team in day-to-day management, the appointment of the Chief Executive has given the board additional time to look at how we structure and run our credit union. This has resulted in a new authorities mandate for Matt and his team, 3 new committees, risk and compliance, nominations and reward, and audit, and the co-option of 5 new directors who add key skills and experience to ensure we remain relevant and make decisions based on the broadest possible range of viewpoints. Before I move on to offer some thanks to those who have made our successful year possible, I wanted to mention an exciting project we are embarking on this year as part of our strategic plan. The Purpose Project is being led by Chris Smith, a founding director, erstwhile chair, and all-round stalwart of the credit union, and will run a comprehensive consultation exercise to redefine and update our very purpose as an organisation. We will be consulting closely with our members and our partners to arrive at a clear statement of our values and purpose. COVID-19 has deepened and exacerbated the issues between the haves and have-nots in our society, and credit unions have provided an important role in the provision of financial services across the UK. I believe that our credit union has never been more important, and revisiting our purpose and our strategy is very timely. And hope if we do and contacting any of you as individuals for support and help on that, I hope you'll be able to do that for us. I would now like to offer some big thank yous to those who have contributed to the progress we've made this year. First of all, to the team in their offices, in their kitchens, dining rooms and bedrooms around Manchester, Matt, Andy, Joel, Nicole, Matthew, Veronica and Katie, who is currently on maternity leave following the arrival of her second daughter in October. Your efforts in these testing times have been remarkable, and our success is down to your ongoing commitment. And to those who have left us in the year, Janet Henry, Sheena Jennison, Jake Hatch and Tom Field, thank you. To our volunteers and part-timers, Charles Sim, Ken Jackson and Nell Phillips. And to the board of directors, old and new, David, Chris, Grant, Robin, John, Rebecca, Claire, Nisha, Peter, Lisa and Sam. If the technology is going to work for us, they'll all be able to sort of show their faces and wave and say hello. We'll try for that. I can see a few. See you folks, good to see your team. One of these days we might be back in Manchester. Okay. Thank you. And to 2 individuals in particular. Nick Money has been involved with the credit union for over 20 years, serving on the board for most of that time. He stepped back from board in 2018 given work commitments, but remained as a volunteer through to 2020. The board has rewarded him with the honorary position of Life President, the 3rd time this award has been granted, following Graham Southall and Andy Oldale. A huge thank you to Nick. And to Claire Dalton, who has served as Secretary and Director since 2014. Given work and family commitments, she stepped down from the board during 2020, but has remained as Secretary since then. She is now stepping down from that role after this AGM. A huge thank you to Claire, She has been a friend and a valuable supporter for me and for all of the board, and has ensured the good governance of our credit union. And thank you to all our many partners and supporters, the cooperative group and cooperative organisations across the UK. And in what are such extraordinary times, to all colleagues across the movement who provided such a tremendous service to their customers. I know the service and sense of community at the Bromley Costa store in Bolton has stood out for me personally in this last year. Thank you to you all. It only remains to say thank you to our members and who are our owners. It's your credit union. Thank you for your ongoing commitment and loyalty to the credit union. We are delighted to serve you every day. Thank you. And unless there are any questions or comments arising from any of that, we'll pass over to Grant for the Treasury.
We do have one question, David, which is around the loan policy. But I think what I might suggest is that we take that later, which is when I do my presentation, which is more of a kind of operational type question. So just to let Matthew know who asked the question, and we will come to that a little later on.
Okay, right. Over to you, Grant.
Thank you, David. Good afternoon, everyone. So the headline from our financial results for the 2019-20 year, which I'm hoping Matt will flick on the slides and come up with the Treasurer's piece. Headline from our financial results is a £15,000 surplus for the year, stronger than we expected, given our investment during the year in new technology and new staff, and a very pleasing result given that strengthening capability, and also the headwinds caused by COVID, which caused a slowdown in lending in the springtime. Most pleasing and driving that result is the growth in our balance sheet in the second half of the year. 20% growth in our loan book year on year, 15% growth in deposits. The growth in the loan book is particularly key given very low bank interest rates at the moment, which means we get very little credit for surplus funds sitting in the bank, and we really only earn return when we're able to lend that out to members. Of course, that growth has to be controlled in terms of risk, and I'm pleased to report that our performance remains strong, with the bad debt charge only 2% higher than 2019, representing 3% of our active loan book at the year end. Bad debt charges are a key variable in our finances. They're the second biggest cost on our P&L after staff salaries, and they're much less predictable. So they are a key variant year to year, and as we grow, we'll continue to keep a close eye on those. We did amend our accounting policy for bad debt during the year, and this is reflected in this year's accounts. We adopted a more consistent approach to recognising impairment losses sooner where loans go into arrears, and that's a more prudent position than is required by our regulator, the Bank of England. Also, in consultation with our new auditors, the board agreed to write off bad debt on loans more than 12 months in arrears. They're already fully provided for in previous year's accounts, so there's no impact on profit, and there's also no impact on our operational processes to pursue the debt. But the aged debt previously held on the balance sheet for up to 6 years just distorted the balance sheet unnecessarily. So we've tidied that up. There's a note to that effect in the accounts, and that should be a lot cleaner to review going forward. Our expenses in the year increased as a result of restructuring our staff team, and in particular bringing in our new Chief Executive, Matt, back in January, and also introducing new technology with the Nevo messaging app, which I hope many of you have used, and increasing our spend on marketing and member engagement activity, which has paid off really well in terms of income generation. Our capital to asset ratio, which is the key indicator of our financial strength, is 8.65% at the year end, well ahead of the regulatory requirement of 5%. So we're in a strong position there as well. The board has agreed a financial plan for the next few years with continuing growth over those years and relatively modest annual surpluses, focusing very much on continuing to invest to achieve growth rather than delivering short-term profits. Changes to the Bank of England regulations support that ambition. The previous set of regulations would have required, if we wanted to grow to that extent, for us to build up our increased capital reserves well in advance to achieve a capital ratio of more than 10%. Remember, it's currently 8.65, more than 10% by the time we reached a £10 million asset portfolio. The new rules mean we can accumulate capital much more gradually, and our current capital is adequate to do that. Growing our loan book is our key financial priority. The loan to asset ratio is low. We only utilise about 40% of our funds in terms of what we lend out. And at a time when affordable lending will become more important to many people around the country, we aim to put our members' deposits to better use by lending more of them out rather than simply investing them in bank accounts. To support that growth and recognising the low interest rate environment, the board has agreed a dividend this year of 0.25% on savings balances. That's lower than we've been able to offer in previous years, but remains a competitive rate for instant access savings and reflects our strategic priorities in the short term to continue to grow rather than pass out our surplus. However, in conjunction with that cut in the dividend, we have agreed as a board to remove all fees, the £3 joining fee, the £5 annual account fee, and the £5 dormant account fee, which were previously charged. And for the majority of members, that will offset the reduction in dividend. It also removes a key barrier to growth, both in terms of individual thinking of joining the credit union as new members, but also employer partners who saw that very much as a negative factor in their relationship with us. I'll pause there. I don't know, Matt, whether we've got any questions coming through. So I'll take any questions at this stage, and then we will put the dividend proposal to a vote.
Sure. Thanks very much, Grant. So we do have a question, more of a sort of housekeeping thing, but I'll cover it just now, just for everyone's awareness. So one of the attendees was interested to know whether we'll distribute the slides after the meeting, and we're very happy to do that, and I've made a note to do that, and we'll issue the slides out to all of those who are registered to attend after the event, and we'll publish them on the website as well. There's nothing there that we wouldn't be happy to publish. And then the other question that we had coming in was about how we're going to achieve the loan growth that's targeted, but I said a bit like the question earlier, we'll cover some of that in my report later, so we'll just park that one for now. But that was all the questions. So shall we move to the poll?
Yes, please, Matt. Thank you.
Okay. Okay, please vote now, everyone. I'll leave the poll open for a minute, so please be prompt with your vote. Thank you. We've got 98% of people voted, so there must be one person out there who hasn't voted yet. Oh, it's 100%, so I'm going to close the poll now. Thank you, everyone. And I'm sharing the results. You should be able to see that now. So it's,
excellent. So a strong majority in favour of that. So thank you for your support on that. So that's the end of my report. It just leaves me then to introduce our auditors. So our previous auditors, Beaver and Struthers, resigned during the year. They withdrew from the credit union market. The board ran a tender process to appoint a new auditor, and we were pleased to appoint KM Accountants from Burnley. So I'd like to introduce Mark Heaton, their managing director, who joins us today to present their audit report.
Okay.
hi, Mark.
Hello there.
Oh, there.
Good afternoon. First of all, with our work in credit unions, one of the things I'm always keen to remind members of is the responsibilities that the directors have to not only to yourselves but also to the regulators, the Financial Conduct Authority and the Prudential Regulation Authority. And the rules that they have are becoming increasingly onerous, and bearing in mind the directors are volunteers, and they do have a huge responsibility. So it's important to remember that with what the directors actually do and their responsibilities. The audit we carried out this year, we did it all remotely, which was challenging to say the least. But the accounts were completed and they've been, I think they're available, and our audit report is on pages 5 and 6 of those reports. I don't intend to read it out to you, but there's no matter that we wish to bring to your attention as members. Everything went very, very well, and our audit report is clean and shows the accounts show true and fair view of the financial statements as at the end of September 2020. And finally, just thank you to the staff for their assistance in conducting the audit.
Thank you very much, Mark. So I think then it falls to me to propose the reappointment of KM Accountants as the auditors for the next financial year. As I say, the board ran a tender process in the summer. A number of firms of accountants, and we're very pleased at that stage to appoint KM as the strongest partner for us in terms of auditing the accounts and the additional support they can provide. We've been pleased with the way that's worked through a challenging year-end process given the working remotely, and very pleased to propose their reappointment for the next year. So I think, Mark, there's another poll?
It is. I'll launch that, and then we'll need to also have a poll thereafter on accepting the accounts as well. So I'll do the reappointment first.
Sorry, I'm taking you. I forgot the approval of the accounts poll, didn't I? I'm taking you over order. You put me right. Thanks.
Don't worry. So I'm not actually seeing the poll there. Might have to ask for Jackie's assistance for the reappointment of the auditors. Am I being silly, Jackie?
Just let me check. No, I'll add it in, Matt, if we can come back to it.
Okay, so are you able to add one whilst I'm running another one? Okay,
yeah.
Well, let's just do the approval of the accounts vote first then, that's okay. So I'll launch that now. And again, I'll either close it once everyone's voted or leave it open for a minute. Still one or two haven't voted. If you want to vote in the next 10 seconds, otherwise the poll will close. Okay, thanks everyone. So I'm sharing the results now. Strong vote in favour.
That's a relief.
And Jackie, are we ready with the next one, or you? Yes, I've got that. Thanks very much, Jackie. Okay, so I'm launching the second poll on the reappointment of KM Accountants as our auditors for the new financial year now. Okay, thanks everyone. So everyone's voted on that one, so I'll close the vote and I'll just share the results now. And hopefully Mark's pleased to be reappointed for the new year. Thanks a lot.
He might have been the one who voted against. Anyway. Thank you very much, everyone. Okay. Matt, I think we're handing over to you.
Yes, thank you. Okay, so I'm going to put my camera on. Apologies, you have to look at me for a while. Hopefully this is working. Yeah. It's a bit. I think I'll minimise the video of myself. It's a little bit disconcerting. Anyway, so thanks everyone for attending today. Delighted to be attending my second AGM as Chief Executive. Yeah, what a year it's been. I think it was Valentine's Day last year that we held the AGM for 2020 for the financial year before, and little did we know at that point what was about to overtake us, as David said at the beginning. This is a picture of me. So you've got the pleasure of two pictures of me at once here, working at home, and I guess this is trying to bring to light in some way how it's been for us and for everyone really, I suppose, over this last year of lockdown. But for the credit union, you know, there was quite a lot of work that went into moving to home working, and we had quite a period of activity in the first part of 2020, investing in our systems, in our network, and really moving away in practical terms and finalising a process that had already begun when I joined the credit union from our reliance on the co-op group network, and it was really critical that we did that. It's some work that we accelerated when I started in January of 2020. And it's enabled us to make what I think, and I would hope that the members listening in this afternoon would agree, has been a fairly seamless transition to home working. You know, we have had to change some of the ways in which we do things, and primarily, I suppose, that's for those that like to phone up for a chat and speak to us. We're having we've got a bit of a callback system in place, as you might have experienced yourself. So we have made some changes to how we deliver things, but by and large, you know, we've been able, as has been illustrated with the financial reports already, to achieve a pretty solid set of figures, good growth, and you know, continue to provide that service to members throughout the pandemic and the lockdowns, particularly that first very intense lockdown when it was very new for everyone, with hopefully minimal disruption to the experience that you have and that you're familiar with using our services before. So we're pretty proud of that, and there was a lot of work that went on behind the scenes with the team to deliver that seamless transition. So I'd like to thank the guys but for all of their hard work making that happen. And I did want to, I think a few of them popped up on the director's wave earlier on, but I'd like to invite them just again to show themselves, turn the cameras on briefly. I'm going to have to flip my view so I can actually see them myself. Yeah, so we've got, I thought it'd be a nice opportunity today for you to put a face to a name, really. You'll have come across Andy, particularly, I'm sure, in your dealings with the credit union over many years. Andy's worked for the credit union for 16 years, I think I'm right in saying, and he's our operations manager. Then we have Matthew Watkins, rarely seen in a suit, but there he is, looking very smart today. One of our more experienced, longer-standing member service officers. And then some newer faces, Joel Williams, our finance, banking and credit manager, who joined us at the very end of November last year. Nicole Lawton, another member service officer, who joined us September, was it? September, I'm trying to remember off the top of my head here. And Veronica joined in October, and then Joan in November as well, I think. So we've got some new people in the team. We've also got Katie, who I think is listening in, though she's not working because she's she's in a maternity leave at the moment, having had another little girl, which is fantastic. We're all delighted for Katie. So hopefully Katie's listening. It's nice to have the opportunity to say hello today. And yeah, these are the guys that serve you every day. And that's it. The sum total of us. So we're a small team, but we're growing. And and as I say, I really got a lot of thanks and gratitude for all the guys in the way that they've just weathered and coped with what's been a really hard set of circumstances. I mean, you might not believe it looking at us, but we do quite like each other, and so not being able to sit in the same room as one another and have all of that in social interaction, that support, and having to adjust to working at home and all that comes with it, especially with those of us with children, homeschool and everything. It's been a real challenge, and we shouldn't be underestimated. So thank you, everyone, and thanks as well for being so sporting in being willing to turn your cameras on and embarrass yourselves a little bit there. So I'll let you go now. You can disappear and relax a bit. So it's been a successful transition to home working, and one of the things that's made that really easy is the introduction of the Nevo app that we launched back in March 2020. And again, this was something that we were already planning, and it was lucky that we were, because it's made that transition to working at home, to working remotely in various places around Greater Manchester that much easier. But what's more, I think, and I hope the members listening would agree, and those that have used the app, it's really improved the experience that members have in terms of how they engage with us, how easily they can, for instance, sign a loan agreement so that we can, get those much needed funds out to people. How the smooth process you have to join and to pass the security questions, all the rest of it. It's really brought our member experience on a great deal. And so, the introduction of Nevo in March has been a particular highlight. Another thing that really helps with the transition to homework, and you can see there on the picture actually the laptop that I use day to day when I'm working for the credit union, and you can and those machines were funded by a grant that we received from Fair for All Finance, which is a kind of arm's length government organisation supporting the expansion of ethical community-based lenders like credit unions on a national scale, with money that was taken from dormant bank and building society accounts. So we received £10,000, which enabled us to invest in this new kit, which has really made a big difference to how that transition worked and to how our experience of working from home. And then the last thing I wanted to highlight there in this connection was Fern Software. So this is not necessarily so visible to members day to day, but it's the core system that we use to track your accounts, to log your deposits and your loan repayments, and the system that enables you to check your balance online through the website and to request withdrawals and all the rest of that good stuff. Is provided by our partners at Fern Software based out in Belfast. And this year we've spent a lot of time in the background meticulously going through the functionality within the system and ensuring that we're getting maximum value out of the system. And what that's enabled us to do, all of these things, the Nevo introduction, the grant, and the work we've done around the use of the Fern software, has enabled us to achieve that. What we're really pleased about, that level of growth. It was 20% loan book growth for the financial year ended in September, but was actually even better than that when we take into account the quarter that then followed on up to Christmas, to the end of the calendar year, where it's actually reaching levels around 30% growth for the calendar year. And that, a lot of that what's enabled that is this work we've done in the background to improve, how we use the systems we have, to reallocate responsibilities amongst the team, to invest time and energy in training the guys in new responsibilities, and to become more efficient in how we process loans and the information we ask for you from you when you apply, in order that we can make a decision quickly and get that loan out to you as smoothly as we can. So we've been able, that growth's been possible without adding headcount to the staff team, and so we've been able to grow through becoming more efficient. And so it's been a real team effort across a number of organisations, and with the guys that you've already been introduced to there briefly. The other thing I wanted to highlight, and those of you that were there on Valentine's Day last year, our AGM in person, will have heard me say something about this. We've been really active in communicating with you, with engaging with you. You'll be aware, I'm sure, of the emails that we send out, the newsletter emails each month now. We're much more active on Facebook and Twitter and other social media platforms, and we're going to continue to do that, as well as engaging with our valued partners at the employers that you all work for or are members of in the cooperative sector. Because we can't expect you all to use our services and to add value to your lives in the way that we want to if you don't hear from us and you don't know that we're here. And we want to be as engaging and as supportive in the stuff that we're putting out to you as we possibly can be. So we're, it's not all about just kind of highlighting our products and services, but trying to give you useful information alongside that to hopefully make your lives a bit easier. And hopefully Mel Phillips is on the call as well. I just wanted to sort of give a little shout out to Mel as well. Mel, some of you may know from her years working in the cooperative sector, and she works with us on a freelance basis, supporting our engagement, marketing, communications activity. And it's been a real pleasure working with Mel on all of this stuff that we've done over the last year. The other thing that's highlighted on this slide as well is the introduction of the family loan product. So we launched the family loan product back in May 2020, and this is a common product across more predominantly community-based credit unions in the UK, but an idea that we thought would work very well for our membership as well, many of whom are relatively low paid, supermarket workers, working part-time hours, that many women and mothers who receive child benefit, and this facility, the family loan product, enables us to use that child benefit to give access to affordable credit to support the costs of support, bringing up a family, and at 35% APR, we believe it's a really compelling proposition, especially given, for example, back in February of 2020, the FCA's measures around overdraft lending in the mainstream bank market meant that most of the big banks now charge something like 40% APR just for an overdraft linked to your current account. And then we know, sadly, that a lot of the lenders that many of our members do use charge many multiples of that again. And though we might think of the payday lending market having been squashed by the action of the payday lending interest rate cap and so on a few years ago now, actually it's just led to a kind of mutation in the business model operated. So there's still very expensive credit out there that many of our members we know from reviewing their financial information do still use. And so this is about us trying to provide a facility that we can extend to people that our core products otherwise wouldn't be appropriate for, and it's been an important part of our successful year and the growth that we've achieved. And one thing that we're particularly proud of is this slide represents the results of a question we asked in a survey back in July. We sent out a link to this survey on the email newsletter that we issue, as I say, every month in the July edition, not knowing really what to expect in terms of levels of response and so on. And we were absolutely blown away. Mel and I couldn't really believe our eyes actually when just 24 hours later, 1,200 members. Bearing in mind that we have just a little bit less than 9,000 in total, had responded to the survey. So that in itself, we were flabbergasted by and really pleased. It's really encouraging levels of engagement. But not only that, when asked to rate us on a scale of 0 to 10, how likely would you be to recommend the Co-op Credit Union, which is some of the marketeers amongst the audience might know this as a Net Promoter Score question. 65% gave us a 10. And then I'm just moving this box out of the way so I can actually read the result myself. 9% gave us a 9, 10% 8. And the way that the Net Promoter Score works is you take the 9s and the 10s and you discount 6 from the total of those that gave 6 or below. And that gave us a positive 63.5 score on the Net Promoter Score measure, which is, fantastic result. And in fact, many of the leading brands in technology and finance, and certainly in the banking market, where scores tend to be in negative territory, to get such a positive score as that, we couldn't have been more pleased. And I think it demonstrates how, the credit union over its 20 odd years of operation has built a really strong loyalty amongst its members by providing services that are relevant and that support what members need. So it's from that kind of base that we're growing from, and it's really strong kind of base in terms of our member loyalty that we've got there, along with some of the financial strength that we've already seen in the Treasurer's report. So as in terms of, we did have a couple of questions earlier on, some of that which I sort of in the chat I was saying that we'd come to later on. So one of the questions was about, in our growth ambition that was highlighted by David earlier. One of the questions is asked around, well, how can we achieve that doubling of our loan book value in a period of only a few years? Is that too ambitious? And I think, given that we've been able to achieve, as I said, in the calendar year, if we take those numbers, more like 30% growth in the loan book in a year, I think, we feel pretty confident that it is possible, given the loyalty and the support we've got from members as well, to grow. But we do have a plan. We're not just sort of doing it on a wing and a prayer. So we've got significant work ongoing around governance, and we've invested a lot of time and energy, and we're going to be introduced to a few new directors that we've recruited in part of that process, as well as some new committee structures as well. So we're very conscious that we need the compliance and the governance arrangements to be right to make that growth plan work. But we're going to also continue to invest, as we have done, in technology. So we've introduced Nevo, as has already been mentioned. But with plans, and we're actively in discussions with other technology providers who will provide even better service, we think, to our members than we're already providing, and an even more accessible service, and a service that, critically, as I'd already sort of highlighted in terms of that efficiency piece, would allow us to grow significantly without necessarily needing to add lots more staff, at least in the same ratio proportion that we currently have, people to numbers of members, for instance, because through systems that are more efficient, we should be able to manage that. Now, it's really encouraging that we have this engagement with Fair for All Finance, and we're speaking actively again with them around opportunities to attract investment to support some of that growth. But even without that, as Grant had mentioned, the capital rules that our trade association, ABCL, and I know a couple of ABCL's staff, including their chief executive, are on the call listening in. And I know that, of course, this platform is provided, we're being hosted by ABCL's platform as well. They were really, it's a great success of theirs to achieve this change in the capital regulations that we currently have to comply with. And so actually we can invest what income we're able to generate We can reinvest in new technology, in upskilling staff, in thinking differently about how we do things, and all the rest of it, rather than needing to focus in the short term on accumulating capital in order to get to 10% by the time we get to £10 million of assets, or essentially accumulating £1 million. Those of you that have looked at the accounts will see that we've currently got shy of 600,000. So if we were in a position where we needed to get to £1 million by the time we got to £10 million of assets, we would have to think about things much more differently. But because we're not in that position, we've already got the capital we're going to need by the time we're 40% bigger. Then we can invest for growth, and that is the strategy that we've got. And so alongside technology, we'll be investing in marketing and the engagement that I've already mentioned, and business development critically. We're keen, and we're going to see some of this in the motions I'm going to speak to shortly. We're keen to expand our presence both with the employer partners we've got already in the cooperative sector. We've got one of those, a valued one of those from mid-counties. Our partners there speaking a little bit later on the agenda about their energy proposition. But also we're thinking more broadly about what expansion might look like, and in particular, we've focused our energy on our relationship with the USDOR shop workers and distribution workers trade union, and we're thinking about the opportunities that might open up to us in time as well. So we're going to invest in that, and we're going to invest as well in our people. As I've already said, our people are crucial to delivering the service that we do every day. And I'm, hugely grateful to all of the team that you were introduced to there for everything that they've done to achieve the results that we've done this year already. And we're going to continue to support their development as a critical part of our development as a business and as a cooperative society in this investment strategy that we've got. So, investment is the key to driving that growth, I suppose, is the message I'm trying to give to the questioner, Richard, earlier on. And yeah, the last thing I wanted to touch on, it's been briefly mentioned already by David, is the Purpose project that Chris Smith, who you'll hear from a little later on, is leading from the board. And it's really crucial, I think, for us, as well as trying to grow and being focused on the kind of the numbers, to also take the time to think, what is it as a credit union in this cooperative sector and in this retail grocery sector that we're in? What is it that's different about us? Why should anyone care that we're here? And how is it that we add value to our members' lives? And so that project really is about looking at that, and also how do we measure those things, and how can we then demonstrate to our partners that we're doing those things that we often claim to do. So we're putting a lot of energy and thinking into making that a process that really works, and it's going to involve a lot of consultation. And I think one of the most critical elements of consultation that will be involved is with you guys, our members. So there will be opportunities, and if it's something that you're interested in being involved in and having your say, then please do keep your eye out. We'll be putting information out on the newsletter through the year around how you can get involved in shaping this future that we are aiming for. And it responds to a couple of the questions. Again, I'm going to try and segue into answering some of the questions we've had coming through as the other guys were speaking earlier. One of which was about, has the credit union ever considered offering a credit card product? And I think we have in principle and in theoretical terms, conceptually, we've no objection to that. And I think it's the kind of thing that we'd love to hear from members. It's one of the questions, in fact, we did ask in the survey I've already mentioned, with the Net Promoter Score that you can see on screen there. But there will be opportunities to get through the Purpose project to put those kinds of views across. If you think we should be offering a credit card, we can't promise and guarantee that we'll be able to do it or do it in the time frame that you might like. It would be quite an undertaking. Any new product is, and something like that would be quite an undertaking. But if it's something that members would use and would respond to their needs, then this project is about identifying what those priorities should be. So please do let us know and get involved. The other question that I was going to try and answer in this connection was around the loan policy, and there's a question about, well, how do we make our decisions, and how do we decide who gets a loan and who doesn't, and the suggestion that perhaps we maybe not offering credit when in fact it is affordable. And I think what we'd say to that is, we'd ask for some understanding from members, because it's of course the case that whenever a member applies for a loan, they believe that loan to be affordable. They're applying for the loan with a view to it being granted. But unfortunately, we don't always agree with that assessment, and we have to be responsible, both in terms of, shepherding and stewarding the assets that our members entrust to us, but also in terms of making a decision about what's responsible in terms of an individual circumstances. And extending additional credit is not always the right way forward for people. So we do try our best to say yes to as much of the applications that we receive as we can, but we can't always guarantee saying yes. And that is a critical part of what we're doing in terms of the investment strategy, is around refining and improving the policy that we apply to loan decisions. And it's again referred to a bit later on in the motions that we're going to come to later in the agenda, around how that's working now versus how it used to work with the credit committee structure. But it's something, as I say, that we're always looking to improve, and so that we can make the best decisions both for us as a credit union and for our members. So finally, before I move on to the next section, I just wanted to say a big thank you again. But I've already mentioned the staff, but again, reiterate that their efforts have been really critical. I'd like to say thank you to all of the board, David, the chairman, and all of the rest of the directors, whose supportive approach and their wisdom and guidance through this year, and especially with everything we've had to contend with the pandemic, has been invaluable to me, and I know the rest of the team. So thank you to the board and staff. Thanks to our employer partners and all of those organisations we work with the suppliers and tech providers that have been mentioned. Particularly thanks to the cooperative group, who remain our biggest partner in terms of the members that we serve and where they work. It's a crucial relationship for us, and we're delighted to receive as much support as we do, both in terms of helping us promote ourselves, but also in the office space that we enjoy at Angel Square. Not that we've been there very much this year, but in ordinary times we would. And we really do value that relationship with them and with the rest of our employer partners, which is critical to our success. And we're really keen to deepen those ties with all of our employer partners, as well as new ones that we'd like to build. But finally, I'd just like to say thank you to our members, to you all who are listening in, and those that couldn't make it as well. We're so grateful for all of the support and for all of the feedback that we receive, and for all of the the really nice messages that we receive on a daily basis from members who've been able to help. It really does make the whole thing worthwhile when we see what good we're doing for our members. So thank you to you all. So I now just want to move on in the agenda. So I'm just checking if we've got any questions I've not covered, guys, before I move on.
There was one that came in, sorry, Matt. What fraction of loan applications succeed, A, in full, or B, in part?
Oh, well, that's a good question. I wish I had a very exact answer for it, but I'm going to be completely honest and say I don't know off the top of my head the answer to that. I think it's something that, as I said with the Purpose Project, I'm really keen that we do better on, is defining, what kind of metrics we want to monitor and measure and report on. and then putting in place a framework to do that. And right now, that might seem like a basic question, but for limitations around how our systems work currently, we don't actually have an exact figure. I would say it's something in the region of 50% that we approve, and we do get a lot of applications we can't approve, but we really do, when we decline a loan, it's for reasons of genuine concern that it wouldn't be the right thing for the lender. And another thing we're thinking about in terms of that purpose project is, what can we do aside from extending credit where that's not, we don't think that's the right solution. Maybe there are other things we can offer to make that happen, to help people's finances along.
Yeah, thanks, Matt.
Okay.
Okay, yeah, just as a future, maybe it's something that you could think about putting it in the Treasurer's report. Just break down the percentages. So, and just one more, sorry. What plan does the credit union have to reach more to prevent members going to loan sharks instead of coming to their credit union?
Yeah, so I think with that, it's about two things, I would say. First of all, in terms of the marketing engagement, activity and the communication stuff we've been doing, we're really trying to raise awareness amongst our members of the fact that we're there, and what products we offer and the support we can provide. So I think that's critical. We do partner to some extent, and maybe could deepen our partnership with the Loan Shark illegal money lending team, which is based in the West Midlands and runs various activities to try and disrupt the activities of loan sharks and also promote alternatives. So we've done a bit of social media stuff around promoting content that they've provided. And then thirdly, it's about products, I think, and the point on the family loan is an important one there. That was about trying to provide a facility for people who otherwise we wouldn't have been able to support, and that's particularly the case in the co-op membership, annual store membership, where we don't have the payroll deduction facility there to enable us to say yes to more people, and that is a critical thing for us. It helps us manage the risk, and so being able to do something with child benefit as an alternative has enabled us to build, and we continue to build, a presence in communities up and down the country with people who I think are probably in the at-risk market for using loan sharks if they can't access credit elsewhere. And I think that, finally, in terms of business development, we're really keen to work with more employers, so that we do have that payroll deduction facility in place for more people. And again, that enables us to provide a facility that otherwise we wouldn't be able to do, and that would, I think, probably compete with the activities of illegal money lenders too. So those, I suppose, would be my responses on that loan shark question.
Thank you. And just one more regarding the accounts. Was the very large IT costs in the accounts largely a one-off or significant recurring costs?
So there is a significant IT spend in the budget in the accounts. Sorry, I don't know if it's not a spend that's increased massively over the year, though. We had a hefty financial commitment on IT anyway, and so it's something that I don't anticipate getting smaller. It may not grow quite as rapidly as it has done in years gone by. But as I say, we're looking to invest for growth, and technology is a key part of that. And actually, I think trying to minimise costs on IT is the wrong strategy. And that's we're about investing in things we think add value. We're not just spending money for the sake of it, but we're investing in technology that enables us to serve more people, to offer more loans, and to generate more income. So I think the results that we've got there demonstrate that that's working as a strategy, and we're going to continue to invest, very carefully and in a considered way. But we're not scared of spending money on technology if it results in growth. that's what we're trying to achieve.
That's great, Matt. Thank you. That's all the questions.
Okay. Thanks, Jackie. So the next section here has got is about the committee report. So we've not sort of arranged things such that each committee chair will speak to their report, but instead we're inviting questions at this point. So hopefully you've had a chance to read the papers. There's a report from the Risk and Compliance Committee Chairman, Robin Webster, the Nominations and Reward Committee Chairman, Chris Smith, and then the Supervisory Committee, represented by Charles Sim and Ken Jackson. All of those guys are on the line today, so can answer any questions anyone does have about the activities of those committees. And if I sort of ad-lib a bit whilst we wait for people to type any questions in, it's maybe worth just highlighting in this connection that this is linked to the second motion that we're going to vote on shortly, which is about some work we've been doing on governance this year, and was, David spoke to it earlier as well. We're spending time in really thinking about how best to organise the governance of the credit union, both in terms of recruiting skilled people to the board, also having a clear focus on diversity and ensuring that we have a range of ages, a range of ethnic backgrounds, a balance between men and women, as well as the right skills and experience to drive the credit union forward, because we think that's really important so that the credit union reflects its membership as best it can, and makes decisions based on the broadest range of experiences that it can. So that's been a key element in the nominations committee's activity, but also in terms of managing risk. Risk is a key thing for us. We need to ensure that we're actively monitoring the environment that we're working in, as well as the internal operation of the credit union, to manage our key risks, to identify what they are, to put in place appropriate mitigation, and then to be as compliant as we can be as well, whilst maintaining kind of proportionality. Governance can become a job in itself if we're not too careful. So it's been a key focus of us the year with me and the board to try and enhance the governance arrangements of the credit union. We've made a lot of progress, and the reports of the committee highlight some key elements of that. So have I got any questions at all on this before I move on? I've not seen any popping in as I've been filling a bit of time there, giving people opportunity to drop any questions in. No? Okay, so if not, then we can move on to the motions. But just to reiterate, if perhaps you do have a question, you've just not been able to submit it in that section now, there are opportunities later on in the agenda. So, if you want to come back to the committee stuff later on, do feel free to submit a question. Okay, so now that we're moving on to the motions, and we've got two motions to look at today. The first one is around our common bond. So hopefully most of the membership should be familiar with the concept of the common bond, but as a credit union, we're limited in who can join and use our services, become a member of the credit union by a common bond field of membership test. So in essence, we have to define which groups can join the credit union and use its services. And a few years ago, about 2012, this became a lot more flexible. And so we can kind of mix and match different types of common bond. So in the meeting papers, which are available to download and can be have been distributed by email yesterday, I sent them around to everyone as well. You should have seen that we're proposing two things in terms of the common bond. The first one is to tidy up the common bond in relation to partnerships and relationships we already have that have kind of come about organically, and perhaps the Common Bond needs to catch up to some extent. So in relation to McCall's and Two Sisters, we have relationships there where we already have payroll arrangements in place, and we serve a small number of members in each case. With McCall's, that came about because, as some of you will remember, the Co-op disposed of some of its smaller branches and sold them to McCall's a few years ago now. And we had members that worked in those branches and continued to work in those branches. And so since that time, we've got this common bond. We've got this relationship with McCall's, but only because they used to work for the Co-op. And so that limits our opportunity to expand that relationship, because it's not part of the so I got a message there about my screen sharing, but hopefully you can still see my slide. So it's not part of the common bond, but it's part of our otherwise associated with the core membership of the Co-op group. The same with Two Sisters, which is a key supplier to Co-op and a number of other supermarket chains, largely for meat and poultry goods. Scott Mid is a co-op society. We don't have that active relationship with it at the moment, but we have had an increasing number of applications to join from Scott Mid employees, and so it felt like it was a gap in our common bond. We'd love to have a direct relationship with Scott Mid if there's anyone who is involved and is in part of the common bond. To Scott Mid, then they should perhaps support us there if they can, in terms of sorry, I'm just a bit distracted by my wife speaking over. I don't know if you can hear that. But Scott Mid, we'd love to have a relationship with if anyone can help that. Finally, USDOR, the trade union. We have already a partnership so that our members of USDOR, can join the credit union. But we also have a payroll arrangement in place with their employees, but again, they're served on the basis that they're otherwise associated with another element of the common bond. So it's part of a tidying up exercise, adding those employees in their own right to the common bond. And then in terms of the other proposal there, we're also adding, with the advice of ABCL, a list of retail worker categories based on the Office for National Statistics classification of occupational roles, which is best practice for credit unions, as advised by ABCL, who want to expand into a particular sector. And this has really come out of the discussions we've been having with USDOR, as I say. Because it may be that we're advertising our services to an USDOR member through their channels, which we've done quite a lot of. And someone joins in their own right as an USDOR member, but maybe their colleague who they work beside every day isn't part of the trade union but does want to join the credit union. And so what I'd like to what we'd like to do is enable it so that anyone working in the retail sector can join the credit union. That gives us flexibility then to allow USDOR members, colleagues who aren't USDOR members themselves to join, but also potentially in time to expand more widely into the retail supermarket sector. So yeah, sorry that was a bit garbled there because I was slightly distracted with my wife opposite me talking on one of her meetings. So apologies there, everyone. But hopefully that Scott Mid point came across. So there is a question I've just noticed in the chat there on this motion before I move to a vote, and that is about family members who do not live at the household where the primary member lives. So some of you may know, if those of you who've looked at the papers and looked at the detail on the common bond rules that we're proposing, will have seen it there. It's possible to join the credit union if you're a family member living at the same address as a member of the credit union. So if you want your partner or children or whoever might live with you to join the credit union, they can do. Now the question was asked, would we be able to add family members who aren't resident at the same address to that list as well? And the reason that we're not proposing that, we'd love to be able to, is that legislation, the Credit Unions Act, doesn't allow it. So it's very clear in the legislation that we can allow family members to join, but only where they're resident at the same address. And there is a review being conducted by the Treasury at the moment to look at reforming the Credit Unions Act. And I know that this is one of the points that's been put forward for review as part of that process. So maybe in time, once that legislation has been passed and the changes have been made, then we can do that, and we would love to be able to, as I say, but currently we're restricted by legislation. And I can see there's another question on funeral workers. So should funeral workers be included in the occupation list? That's a good suggestion. I mean, obviously the funeral care business within Co-op Group, all of the employees of that business are eligible to join in their own right. We don't have any other relationships with funeral care businesses, but it may be something we should consider. So thanks for the suggestion there, Justin. I think I've caught all of the questions that people have been asking as I've been going through there. There's one other very kind offer of support with the Scott Mid thing. So maybe I wasn't as garbled as I feared I might have been on that point. It obviously came across what I was trying to say. So thanks very much for that offer, and yeah, please do get in touch. We'd love your support there. Okay, so unless anyone's got anything else they wanted to add, I'm going to move to a vote on the this common bond change proposal. Now, it should be noted at this point that as a rule change, we need a 2/3 majority for this to pass. So we're looking for that magic 66% number. Okay, so I'm going to launch the poll now. We've got about 90% voted. $95. I'll leave it open for a few more seconds as we've got 5% still to vote. Probably not many people in practice. Okay, 5 seconds left. If you've not voted already. Okay, I'm going to close the poll and I'll share the result. And thank you very much for your support for that. So that's 93% in favour, so that motion's carried, and we'll move after the meeting to register that new common bond as our formal membership criteria. So the next motion I'll move on to is about governance. So I've sort of alluded to this already in the ad-libbing that I was doing while we were waiting to see if there's any questions for the committee chairs. So yeah, I won't kind of go over that again, but basically, the bit that I didn't mention perhaps is in terms of the credit committee. So we're proposing that the rules that refer to the credit committee be removed from the rule book and replaced with these rules that provide the board with the power to determine what its subcommittee structure should be, to define the terms of reference for those committees, and it lists some things that those terms of reference ought to cover, and it also commits us and the board to providing a report for transparency and accountability purposes. I'm still hiding. Am I still showing those results? Sorry. Go back to the slide there. Sorry about that. It commits us to providing a report, just like the ones you've had in your pack today, on the activity of the committee each year for transparency and accountability purposes. In terms of the credit committee, that's a common practice of credit unions of old, where typically as smaller organisations, more voluntary in nature, where the board and the volunteers as part of supervisory and credit committee would actively make decisions day to day. So before the kind of growth and professionalisation of credit unions, this was a common structure where this committee would be appointed with a view to making decisions on individual applications. And then that's evolved into the credit committee being responsible for overseeing a loan policy, which determines who we do and don't provide credit to. And that's how the credit union has tended to operate historically, where the credit committee has only really become involved where it's a particularly large loan that needs to sign off, or there's some particular nuance to the application that needs a sort of second opinion, if you like. But increasingly, and certainly in the last year, the credit committee in practice has not been active, and that the staff have been making loan decisions within the bounds of a policy that's agreed by the full board rather than the credit committee itself. And as I said earlier on, in respect to some of the questions we were receiving around loan applications, investing time and energy in refining and improving that policy and how it works, and ensuring that we get the best decisions for people is a key focus of the staff and board going forward. So we felt that the credit committee structure now is kind of a bit anachronistic for our credit union, given the point of its development that we're at. And so we're proposing to abolish it with this rule change. Keen to particularly recognise as well in connection to that Rebecca Hamilton and John Rudd, both of whom are directors of the credit union nowadays, but started their involvement with the credit union as members of the credit committee, and whose efforts in that respect over the years have been, really critical and crucial in getting us to the position we're in today. It's not in any way to do down their efforts over the years as part of that committee. It's just about keeping up with the times. So thank you to John and Rebecca and everyone else who served on the credit committee historically. Finally, the only point to sort of highlight, although it's not directly relevant to the rule change, is that there is a proposal that we're working around in terms of the supervisory committee as well. So, supervisory committee is the eyes and ears of the credit union members historically. And again, it sort of dates back to when credit unions were much more community-focused voluntary organisations at a smaller scale, and it's kind of evolved into a kind of internal audit function, and it's operated by a separate committee that is elected on a separate basis, not part of the board. And as credit unions have grown, they've tended to move away from that structure and to employ internal audit services from an external agency instead to provide that assurance. That is really key, that kind of independent assurance that the policies, for instance, the loan policy that I've just mentioned, are actually being followed in practice, so that the board have that reassurance that's independent from me kind of going to meetings and saying, yes, that is being followed. Those external and internal audit functions are critical second levels of assurance for the board. So there is a proposal that isn't actually to be voted on today, but is something we expect to bring forward in the next year or two, to do something similar to what we've done here with credit committee, which is to replace the supervisory committee with another approach to internal audit. So I'll just highlight that as a bit of context as well. So it's part of a much broader kind of programme of work that we're doing around governance, committee structures, and so on and so forth. Okay, so I think hopefully that answers. I'm just checking the questions there. We had one question about, does the board or the staff make decisions on loans? Hopefully that's been covered there. It's the staff working within a policy that's agreed by the board. It's how we me manage that. So what I'm going to do now then is move to a vote on that second motion. Again, this needs a 2/3 majority to institute those new rules. So yeah, I'm just going to launch that now, and please vote. Okay, so we've got 93% voted. 10 more seconds for anyone else who's wanting to vote but hasn't already. Okay, so I'm going to close the poll and share the results. And there you can see that's again comfortably passed with 93% voting in favour. So thank you very much for your support for those motions. We do appreciate your support and your agreement to those. So I think you've heard enough from me now. So I'm going to pass on to Chris Smith. Director's been mentioned a few times. He's going to run us through the elections and a few other items. So Chris, are you there?
Yes, I'm here.
Matt, do you want to just close the poll? Or hide it, sorry. To get
I got to do that before as well, didn't I?
Yeah, I do it.
Sorry, I'm a bit of a rookie with this platform. Okay, right, so I'm going to disappear now. Thanks, everyone.
Thanks, Matt. Thanks very much. Good afternoon, everyone. It's Chris Smith here, and I'm one of the directors of the credit union. Item 9 on our agenda today is elections to the board. The credit union spent a lot of time this year in the year we're just looking at in terms of rearranging the way in which we look at corporate governance, and probably one of the better ways in which we can give examples of that is the way in which we recruited new directors onto the board. We're very pleased that we can tell you that we spent far more time than we've ever done in our history in terms of making sure that the process was both rigorous and at the same time thorough. We looked at issues to do with age, gender, ethnicity, family connections, and by that I mean to try and attract people onto the board that generally reflect the type of families that we currently serve as a credit union. We looked for qualifications, and we looked for members that could become on the board that could have suitable skills, key industry experience in particular. This coincided, this work, with the overall move that you've heard from both David and from Matt in terms of trying to rearrange the credit union so that we're fit for the future in the way in which the nominations and rewards committee can only help. So part of the process was using all the various communications channels more than we'd done before in terms of looking for applications to the board, and we had an excellent amount of excellent response and some strong applications. We shortlisted those down to 4 new directors, and those 4 directors were the committee put them in front of the board, and the board approved those for co-option in September 2020. Now, in addition to these new directors, we've also got one of our existing directors, Grant Mitchell, who is our credit union's treasurer, who's standing for re-election to the board, having completed his first 3-year term. And finally, in the light of the resignation of our secretary, Claire Dalton, we also had to, I have to be fair on this, is that Claire she resigned. It was the longest resignation we've ever seen. I think it lasted 12 months because we wouldn't let her go. We kept her going. But in the end, she helped us find an excellent replacement in Gordon Fraser, a member of the Co-op Group Secretariat staff. And he's volunteered his services in the role and therefore is standing for election at today's meeting. But Gordon was towards the end of the year and wasn't part of the recruitment package that we put together in terms of the others. So the board will therefore like to propose to this annual general meeting that it elects the following directors for a 3-year term. Now, each of these new directors has written a short election address setting out their skills and experience as well as personal reasons for wishing to be elected to the board. And if you scroll down on your information that you receive, you'll see their individual paragraphs that they submitted for today. So we're now going to go to a vote. First of all, we have a re-election of Grant Mitchell, the Treasurer. I'm not sure, Matt, whether these going to be all on one vote or all together. But the first election, in other words, directors that have not been voted as directors before, is Peter Harris, Nisha Ravat, Lisa Parry, Sam Hale, and Gordon Fraser, with the re-election of Grant Mitchell. Can we go to a vote, please?
Yep. So just to clarify that, so yeah, we're going to vote on all of them together, all of the nominees together. So
okay, good.
Only if this doesn't pass would we have individual votes.
Okay.
Okay. Here we go.
Okay. As per Matt's direction earlier, we'll give a minute for everyone to vote. Just while you're considering that vote for a moment, it's also important to remind everyone, confirm what David Fall said earlier as well, is that you will see far more information coming out of the credit union in terms of the evaluation of the board, in terms of skills, knowledge and experience. And you will see reports at this meeting next year in terms of how successful both the structure, size and composition of the board is, and indeed in terms of its outputs.
Thanks, Chris. So we've got 84% voted, so there's a few out there still haven't voted. We've got another 10 seconds or so. Okay, I'm going to close the poll and share the result.
Okay. Well, thank you. So that's an approval now that Grant Mitchell is now re-elected as a director for the credit union, and the first election pass for Peter Harris, Nisha Ravat, Lisa Parry, Sam Hale and Gordon Fraser now are full directors of the credit union.
Okay, thank you. I'm going to hide that.
That now takes us on to item 10 on your agenda, which is the Graham Southall Award. Long-time supporters of the credit union will know that following the creation of the Graham Southall Award back in 2015, every year we repeat this award, and the award is particularly poignant as Graham Southall himself died suddenly in 2019, and we still sadly miss Graham. Graham was the founding secretary of the Co-op Credit Union back in 1998, and he became the credit union's first lifetime president. And history will show that the credit union may never have launched, or certainly never launched as successfully, had it not been for the efforts of Graham Southall. He'll be greatly missed and still, but the good thing about it is that we always remember him, we always talk about him at this time of year in particular, for the qualities that he left and for the qualities that the award was created during his lifetime. So it's my great pleasure on behalf of the board to announce this year's winner of the Graham Southall Award, and that is Rebecca Hamilton. Rebecca Hamilton is the first sitting director to be given this award, and the board want to recognise Rebecca's journey as she pioneered and led our lending processes in a fledgling credit union. She gave daily approval of loans. She also ran a committee that she led, which we talked about earlier, and working off policies that she wrote as well. She led us all. Thereby, those policies enabling the success of the credit union to grow to the size that it is today. And we've got employees doing the same work that she used to do, but they work into policies, processes and procedures that owe a great deal to the foundation that Rebecca laid. We salute you, Rebecca, and we thank you. That's lots of love from the board, and well done for achieving this award. The next item is item 11, Friends of the Cooperative Family Credit Union Lottery. The Credit Union Lottery has been running for over 20 years, and the Credit Union Lottery is a private lottery for members, and the way in which it runs is currently 50% of all the income of the lottery boosts the funds of the Friends of the Credit Union and helping to continue expand the work of the credit union. The remaining 50% of the prize pot is handed out in, and I have to say that asking Andy David this week, it turns out that we've paid out more than £200,000 in prizes since the 20 years that the Credit Union Lottery has been running. But the Credit Union Lottery is run separately from the credit union. The regulator wouldn't want to see credit unions running lotteries within their business, so they run alongside, and it has a separate set of trustees. The lottery is drawn monthly and under supervision using the main credit union computer system, but is open to scrutiny of the internal supervisory committee and also the credit union's external auditors. The lottery is never drawn by an individual, but always with dual control. And I think you'll see that £1,800 is allocated every month, and those accounts are audited. And I think we've got a copy of those within your pack. Now is item 12. Today we're fortunate that we've got a guest speaker. Richard Chavas is the head of product at Your Co-op Energy, which is one of our excellent partners, and he's agreed to be with us today. So I say no more other than to say welcome, Richard Chavas.
Hi Richard, are you there?
Can you hear me now?
I can hear you, great.
Fantastic. Thanks so much, Matt and Christopher, and thanks to everyone for having us here today. I think first and foremost can sort of proudly say that I myself am a Co-op Credit Union member, so recruited by Andy himself in a visit to the Your Co-op Energy office, but probably around 3 years ago now. So it's been really interesting listening to the content today, and first and foremost, thanks again for having me. I won't take up too much of your time. I just thought, in light of the launch via the newsletter that you will have seen on, I think it was a couple of Tuesdays ago now. Clearly, the long-standing partnership between Mid-Counties Co-op and Co-op Energy specifically with Co-op Credit Union has been renewed. So we've been through quite a big change ourselves as Co-op Energy, partnering with Octopus Energy around 18 months ago. And it's been fantastic over the last 3 months to work with Matt, Andy and Mel and reinvigorate the partnership. So first and foremost, to limit the amount of time that I waffle on to you, I think we've got a video to play. Fingers crossed that the technology works, but it will do a better job than me. Brilliant. So yeah, I think just to outline who we are in terms of Co-op Energy, hopefully for those of you that would have seen the newsletter and ideally click through, this will be reasonably clear, but our fundamental point of difference as a co-op is that we have the UK's only tariff that's powered by 100% community generated energy. So no one else has this in the UK at present. And yeah, essentially end to end, for those of you that aren't energy experts, because it's a horribly complicated industry, what we do, step one, is we've got 90 community groups that have built and owned their own renewable generation. So whether it's a wind turbine, a solar farm, a hydro site on a local river, these are local communities that have pulled together and funded and built renewable generation assets. So they generate energy and provide that to us as Co-op Energy. We then sell that energy to residential energy consumers through our community energy tariff. So when you sign up to our community power tariff, you essentially get absolute assurance that 100% of the energy you're using is being backed with community generated energy. Clearly, the hope is that the people we supply pay their bills on a regular basis, which they absolutely do. And yeah, we then pass any profit generated back through to the community energy sector in the form of grants, support, paying them a fair price for their energy. So yeah, our fundamental point of difference is that in community power and that product. Beyond that, clearly your Co-op Energy is a sub-brand of Mid-Counties Co-op, so we're member owned. Any profits generated by Co-op Energy go to one of three places. They're either reinvested back into the cooperative to build the business for the future, passed back to members through share of profits, or we invest them in community benefit initiatives. And in terms of the sort of underlying tariffs that we offer, we're consistently competitive because of our relationship with Octopus, and that there are no exit fees, so you're free to leave at any time, which I think is quite important as a cooperative provider. In terms of our partnership with Octopus, so around 18 months ago, we formed a strategic partnership with them. And essentially what that means is you'll sign up to Co-op Energy on a Co-op Energy tariff, but the service is provided by Octopus Energy. And for those of you that may have switched within the last year, hopefully you'll be fairly well versed with the fact that Octopus are running away with most of the service awards. They're the only Which recommended energy supplier for 3 consecutive years. Switch Supplier of the Year, the Trustpilot reviews speak for themselves. So I think the headline today that we just wanted to share with you is that on our side of the partnership, we're delighted to be able to offer hopefully a really clear point of difference in terms of what cooperative energy looks like, but also with award-winning service. So yeah, I'd encourage anyone that hasn't seen the content in the newsletter, because now is clearly a prime time to switch energy. Go through, have a look, and yeah, Matt has my email address, but hopefully there's time for a quick bit of Q&A today. But any further questions, please do reach out to us. Next slide, if possible, please, Matt. Thank you. So I'll apologise because Dali, our head of partnerships, was due to be here today, but she's had to self-isolate at very short notice because of a COVID case at her child's nursery. So I'll do my best to do her slides justice, but it's a good job she's not here to witness it. But yeah, clearly the January newsletter launched the partnership, something that I know Matt and Email and the team on this side have put yeah, a good amount of effort into, and it yeah, gets us up and running, but the hope is that we can build on this moving forward. It starts with energy, but your Co-op Energy is part of a wider Mid-Counties utilities business. So we have clearly Co-op Energy, but we also have cooperative broadband and mobile, as we've merged with the phone co-op very recently. So the hope is that over time our relationship with the Co-op Credit Union can see us offer our low carbon product portfolio to members. So that will include low carbon and competitive broadband. As I've said, we have almost exclusive access to the world's only ethical smartphone in the Fairphone. We're a leading retailer of that. And yeah, I think that the thing that I know Matt, Andy and myself are quite keen to explore is how we can reciprocate and add value between us in terms of the partnership. So it was interesting to hear Matt talk about, you know, trying to mitigate some of the risks to your members of the loan sharking activity through working with employers in terms of, you know, salary sacrifice solutions. We absolutely have that in our utilities business through our flexible benefits arm. So you can see, hopefully there's a myriad of ways that we can work together to help each other's respective groups of members. But it starts with energy, simply because of time of year. Hopefully I've done a reasonable job of articulating who we are on the energy front, but yeah, expect to hear more from us on the broader utilities side moving forward. I'll stop rabbiting on, and maybe there's a couple of minutes for sort of any questions if there are any, but happy to share my email address afterwards for anyone that wants to reach out.
Thanks very much, Richard. We do have a couple of questions that have popped in. I think the first one is about what difference does the partnership with Co-op Energy make? I think I'm sort of having to interpret the question slightly there. So Matthew, just send us another question in if I've misunderstood that. And then I think he's asked a second question as well, which is how do you switch from one of the big six to Co-op Energy? So it's a nice opportunity to sell the switching process there, Rich.
Yeah, absolutely. So clearly the AGM's a uniquely transparent forum for us to be really clear. So yeah, we've got an arrangement in place with the Co-op Credit Union, whereby for every energy switch that there is an affiliate payment made back to the credit union, and I think over time we're really keen to build on that, in that so that there's an affiliate payment upfront due to the credit union, and we've also got a commercial arrangement in place where if any members that do switch and take out our other services in broadband and mobile, that there'll be subsequent payments made as a result. And I think as things mature, we're absolutely looking at bespoke, tailored incentives, competitions to really incentivise members to switch, because clearly on both sides I think there's a really passionate belief in how the propositions align, cooperative energy and a cooperative credit union and lending. So yeah, incentives and member-specific propositions should be a feature later in the year. And the second question, quite simply, if you Google us, Google Co-op Energy, the first links will take you through to our website. And switching, or at bare minimum, I'd encourage everyone just to have a look and get a quote, because we are in most regions across the UK very competitive, and a quote can be conducted in well under 5 minutes. So go to the website, or there's a phone number on the website if you prefer to chat to someone over the phone also.
Thanks for that one. And then we've got one more question to come in as you've been talking. So it's about whether all of the energy that you sell is green, I guess from renewable sources, and it says that this questioner recently switched to Ecotricity, and she's wondering how you differ from their proposition aside from the community generation stuff you've already mentioned.
Yeah, absolutely, great question. So we have 3 tariffs. A fixed tariff, so that's fixed for 12 months, a flexible tariff, which is variable, it moves in line with market prices, and the community power tariff, which is fixed for a year, but that's the product that we ensure is 100% community generated energy. All of those tariffs are 100% renewable. So the whole product set's 100% green. In terms of drawing a comparison against Ecotricity, the community power tariff is probably the most comparable one, in that we ensure that all of the energy purchased for the customers on that tariff comes directly from community generators. Ecotricity also purchase directly from renewable energy generators and do a fantastic job of doing so, might I add. But they won't necessarily all be community owned. So that's where we differ. It's all renewable energy, but the sites we work with are owned, operated by local communities, and any profit generated by those sites stays within the communities they serve. So that's our reason for being, and where we differ from Ecotricity. I think quite openly as well, the community power tariff, you will notice if you shop around, is considerably cheaper for several reasons than Ecotricity, mainly because of our partnership with Octopus and their operational efficiencies. So yeah, something to look at.
Okay, any more questions there, or?
No more questions for Richard. So thank you very much, Richard.
No
very
problem.
much.
Thanks for having me.
One of those individuals who, ever since energy switching was introduced, which is time ago now, isn't it? I've never done it, so it's raining quite heavily here. It's something for me to do this afternoon.
It gets easier every year then, David. So if any challenges, please do reach out, whether it's to us or anyone else.
Thank you very much, Richard. Cheers.
Okay.
We're along to the sort of the end of the meeting. Any other business? I was just going to sort of give a couple of minutes if anyone wants to sort of ask any questions, have to key those in. Doing that, I thought I would just sort of add a couple of points to some of the questions that Matt answered. You know, the IT costs. I mean, I think one of the things I would add to that is, you know, we are a small organisation, yet we have built an IT framework with the additions that were put in during 2020, which is as secure and with the same level of functionality, the same level of speed as a multinational bank in many ways. So, you know, unfortunately these things don't come cheap, and it's one of those things which we have felt was absolutely vital to our success and to be able to provide you, our members, with you know, the services that you want from a savings and loans organisation, your credit union. So, you know, it is quite a big bill, and I think, you know, Matt is right. I think it will stay quite a big bill in the years to come, but it's absolutely vital to making the credit union work. The piece about sort of I think around reject rates on lending. I like Matt, I haven't got the figure in front of me at the moment, but I remember the last time I looked at this, it was around a previous AGM, might be 2 years ago now, I think, where, you know, our reject rates are substantially less than you get from the high street banks. I remember working in the credit card industry before I retired, where accept rates are 30% maximum, really, from those lenders. We have a responsibility to you as our members to make sure that, you know, we are a sound, safe organisation for you to put your money in. We have a responsibility to the regulators who require us to be a responsible lender, and require us to be operating the capital ratios, liquidity ratios, and everything else to sort of ensure the safety of our savers' monies is almost as our prime consideration. And unfortunately, that does mean that, you know, we can't say yes to everybody. On some of the people who come into the market and rather than the payday lenders who sort of disappeared, there's an awful lot of high cost credit out there. I think, you know, the majority of our loans are still in that sort of small amount bracket. We do 15,000, 20,000 pound loans every now and again, but the majority of loans that we're doing every day are sort of around £1,000. And at that sort of rate, that sort of amount, we are probably more competitive than almost anybody out there. And being credit union with a relatively low-cost model in total, with you know, an awful lot of volunteer assistance going in there in terms of how we run, we are a very competitive, but you know, we can only do so much in terms of getting that message out through our own marketing and talking with our partners to be able to get that message through to our existing members, existing borrowers, and prospective members and borrowers. And if anyone wants to sort of pass on little recommendations about us to their friends and their colleagues, we're very, very happy to do so. Anything come through in terms of questions, Matt, or shall I?
Yeah, there has been actually. Just to add to what you were saying there, though, I think it is. I made the point earlier. I think it is really critical for us, in terms of that accept rate point. The payroll deduction and the child benefit now, since we launched that product too, that mechanism really does allow us to say yes to a lot more people than we would otherwise be able to. So it's worth bearing in mind for those of you that perhaps don't have that benefit right now. If your employer could start doing that with us, we'd love to have that conversation. So is that I just wanted to mention a very nice message we'd received, not really a question, but from Caroline Sellers, just to say thank you to me and the team for all our hard work during the pandemic. So thank you for that comment, Caroline. And then there was a question from David Appleton, who's a long-standing member and supporter, always retweeting our things, and he says, as a member and colleague, I'm always promoting the credit union to colleagues. Could we make more use of colleague members as ambassadors? I mean,
Yes.
I don't know.
Yeah. Yes, I think we should. It's one of those things we should we'll have a chat about after the meeting. I think that we haven't done that sort of marketing campaign for a little while. So I think it's something perhaps you, me, and Matt have a kind of a conversation with before we get around to our next board meeting.
Yeah, no, absolutely. It's certainly something that Mel and I, in our sort of planning, have thought about this year, and something we'd like to do more of. We did a bit of stuff this year with the member pioneers within the co-op group. We engaged directly with them and had some success. And we'd love to talk to you, David, and anyone else about how we might build some more ambassadors within our membership. There's a couple of people I've noticed in the list of attendees that have raised their hand, but we haven't invited them to ask a question. So I don't know if maybe they haven't typed it out, so we'll just have to ask them to speak the question. I don't know if Jackie could unmute George Conkey. I'm hoping I'm pronouncing that right, and see if he wants to ask his question.
I was checking with George throughout the meeting, and then we've just got, George is unmuted, and we just had one question from John as well. I know John's had he's been putting things in.
John Rose.
Mr. Rose, yeah. Okay. So there's just one question there from Mr. Rose. Any mileage in working with the credit union to put together a package weaning customers off prepayment meters?
Yeah, so this is in connection to the energy stuff, I suppose, and the energy market. I mean, I think there is an interesting question there, and I've one that maybe with Richard and Dali on the line of energy we could explore in relation to what role, if any, we could play in that question of those customers that pay for energy by prepayment meters who pay much more than those of us who are lucky enough to be able to pay by direct debit. There is obviously, though, quite a challenging question we need to balance within that about the circumstance, the wider circumstances of people whose households rely on that way of paying. That they often are paying that way as a result of having difficulty paying for energy in the past, and missing payments and so on. So it's something we'd want to try and play a role in if we could, but I think we'd need to work with a supplier that was up for helping us figure out what we could do there. I guess would be my instinct. I don't know if David would have anything to that.
I think if I think back to sort of when I was working in the banking industry, and working for an organisation where as a new product was always seen to be the sort of the way forward whenever there was an idea, as opposed to sort of using the existing products. I mean, we have loans, and we have very limited capability at the moment in terms of revolving credit, but that might change in the near future. That if anyone was in a position where they were on pay-as-you-go sort of meter and wanted to move off it and they needed some finance, they can already ask us for a loan, and we can look at it. It's one of those things. It's sort of one of those messages. We tend to put out messages about things like holidays, weddings, home improvement, around about new loans, but it may not be a new product. It may be a marketing route for it. It's something we need to look at.
And Matt, if it helps, there's Rich from Co-op Energy again. I think technology will really help there in that. So look, it is a national travesty that the most vulnerable customers are currently on the most expensive tariffs. That's fairly well known. But smart meters and smart pay-as-you-go will mean that soon, within the next year, pay-as-you-go tariffs will be as cheap, if not the cheapest, energy tariffs available in the market, or they certainly should be. So that's certainly something we could explore between us.
Okay, thank you. And what was the other one, Matt?
So I think there was one that was been submitted on the chat, and it's from one of our most active questioners during the meeting, who's asking if he believes that there is a. I'm trying to get this right here. So I think he's saying there's an opportunity for us to be more active in providing our facility to the people who otherwise might use high-cost lenders. I think I'm right. Matthew, tell me with another message if I've got that not quite right. I mean, I'll hand over to you, David, in a sec maybe, but just my instincts on that is, absolutely. We, as David's already said, our average loan, as is reported in the financial statements, at the end of the financial year, was just a bit more than £1,000, and we're lending significantly less than that in many cases on a day-to-day basis, £100 or £50 in some cases. We're actively looking to support our members with as much or as little as they need in terms of credit, and that is the kind of sum of money that people borrow from high-cost lenders. So we are in that market. We are supporting people who might otherwise use high-cost credit, and we see it every day. People with entries from high-cost lenders on their credit files or in their bank account information when they connect to us with credit kudos. So I think perhaps the question suggests that we're not doing those things. I have to disagree with that. We actively are, and it's a real central part of what we do every day. We could do more of it, certainly, and we could engage with more people and have more members and be bigger. And that's why we're aiming to grow and to engage and market our services more actively than we have in the past. So I think, that is, we don't disagree on that point really, and it is something we're very much in the business of doing, disrupting those lenders.
We can only ever get a certain amount of airtime through our partners' communications to their colleagues, cooperative group or whichever society. They've got a lot of things to try and get out to their staff through the year, and putting stuff out for us is, they help us a little bit, but they help us probably as much as they can. There are things we can do in terms of the messages we send out to you, the members, through the year. I think it may be where this sort of the recommendation idea comes in, and sort of actively seeking sort of growth by talking, by members talking to friends and colleagues, and maybe getting them to come our way. But it's a very, very competitive world out there. There are a number of very, very large banks and building societies, loads of other credit unions, loads of other lenders, and we are very ever going to pick. We're never ever going to be able to sort of do this for everybody. But our ambition, as Matt said earlier, we want to be doing twice as much lending as we are at the moment within 2 or 3 years. And what happened in 2020 was a good start in that progress with 20% growth. But we'll keep banging away, will we? Yes, because we all passionately believe in that high cost credit is not a good thing for a lot of people. Anything else, Matt?
So just that Matthew Field there, the chap who's asked the question, it's clarified. So I don't think I interpreted it quite right. So I think he's suggesting that if we're offering the loans we're offering are too small, that gives people an opportunity to lend to them when actually if we offered more, then they wouldn't have to go elsewhere, I suppose is the logic there. I mean, I think what I'd say in that, for just very practical terms, when we receive an application for a loan, we take the loan application on face value. So someone wants us X amount, £1,000, let's say, then we'll see if we can offer them £1,000. If we think we can't manage that, but we can offer something less, we will do that. We wouldn't generally be offering someone more, and I think it's a bit of a leap to think that if we did that, that would somehow help them avoid high cost credit elsewhere. We have to take our cue from what the members ask for. Generally speaking, someone has something in mind that they want to pay for when we ask for that purpose in the application. So we're not in the business of kind of bidding up. And we think that's part of our values and ethics around the lending and being responsible and so on. It's trying to give people what they need for a specified purpose, but not offering more to people than perhaps they've asked for. I think it goes back to perhaps the point in relation to to turning people down and not offering what they've asked for, maybe, and offering a smaller amount. Now, we only ever do that when we genuinely believe in our assessment that the amount that's been applied for is not affordable. And so, I think that comes down to the point that sort of underpinned a lot of your questions today, Matthew, which is, turning people down who we shouldn't have turned down. And I think, unfortunately, in some cases, we have to agree to disagree on that, because we try our best to lend to everyone we can. We want to grow our loan book. That's our interest, is to lend to people. But equally, we can't lend to people for whom we think it's not in their interest, or who, for whatever reason, we think have a strong likelihood of not repaying their loan, and therefore that's a cost which all of the rest of our members bear ultimately. So I think we try our best to lend to everyone we can, and we have a policy that's designed to do that, and we're investing in improving that policy. But we can't always agree what the member asks for, I think, at the end of the day, and I don't think that's ever going to be true. We had an application just recently that springs to mind. Someone wanted £10,000. Is it take-home salary each month was less than £1,000? He couldn't afford that loan, and it would have been irresponsible to give him the loan he asked for just because he'd asked for it. And I think that's ultimately, we have those judgments to make every day, and that's just part of what we do.
So I think we're sort of up to time, really. So thank you all very much for joining in. We are a credit union. It's your business. You are members. You own us. Well, I'm one of those members. But thank you. The virtual meeting has a future. We are a national organisation. We have members come from all over the country, and we we have an AGM historically, which has been in a room in Manchester, which is not that convenient. So maybe this will maybe the first, but it may not be the last. Thank you all. If you have any other questions, any other thoughts, viewpoints that you feel you haven't had the chance to get across to us, whether they're good ones or bad ones, praise or criticism, I don't know, you know how to get in touch with us. So thank you all very much. Enjoy the rest of your days. Thank you. Bye.
Thank you, everyone.